Hi, today I will be discussing a video about the history, development, and current status of IFRS. It is an overview of international financial reporting standards. Today, we will be discussing in this video, we'll walk through the history, development, and current status of IFRS, shedding light on why it's so important for global financial transparency and consistency. By the end, you'll have a clear understanding of IFRS and how it shapes the way businesses report their financial information worldwide. So let's dive into this. So the introduction of IFRS. What is IFRS? International Financial Reporting Standards are a set of global accounting standards that provide a common financial language for business worldwide. This presentation will explore the history, evolution, and current relevance of IFRS, offering insight into impacts on global financial markets and businesses. As globalization increases, companies are operating across borders, which necessitates a common accounting language to ensure that financial reports are comparable and transparent. Next slide. IFRS. What is IFRS? So, IFRS stands for International Financial Reporting Standards, what we said before. As indicated within the title, these standards are aimed at global practices. The goal is to achieve a single set of high-quality common accounting standards used worldwide. These standards are the result of a convergence of international viewpoints. These standards are for publicly accountable entities. What is IFRS? International Financial Reporting Standards. IFRS are standards and interpretations developed by the IASB to provide how businesses should report their financial performance and position. They are used by over 140 countries worldwide. Some of the core principles of IFRS are transparency. Financial information must be clear and easy to understand. Comparability. Financial statements must be consistent across organizations and industries. Accountability. IFRS ensures that financial statements reflect a true and fair value of the company's performance. And IFRS aims to create a standardized framework for companies across different countries to follow for their financial reporting. Here are some key points on why IFRS was developed. So, globalization of businesses. So, as businesses expanded globally, the need for a uniform accounting framework became critical. So, they needed to adopt something. They needed to adopt a framework. Different countries had different rules, creating confusion and consistency in financial reporting. Another point is transparency and investor confidence. IFRS helps improve transparency in financial reporting, which in turn boosts investors' confidence. This is this is essential for attracting international investors and ensuring fair competition. Another point is reduction of reporting complexity. A common set of standards reduces the complexity of preparing and comparing financial reports, benefiting businesses that operate in multiple countries. So this next slide we'll be discussing IFRS accounting standards, and we're going to address some of the challenges. So IFRS versus GAAP. So IFRS global accounting standards that allows FIFO or weighted average. It permits capitalization in specific cases, and the statement of comprehensive income handles that. GAAP standards used in the United States is used in the United States. The IFRS standards are used globally. It allows FIFO, LIFO, or weighted average. Generally, expenses, R&D, research and development costs. Separate income statement and statements of comprehensive income. So, all right, we back on global accounting trends. Given the statistics I just talked about in the slide before, well, in the slide after this, it is clear why it is important to understand the difference between U.S. GAAP and IFRS. More specifically, there are two developing trends to be aware of. Geographically diversification. Investment firms have been broadening the geographic scope of their investments to consider opportunities overseas. Moreover, 500 plus foreign SEC registrants use IFRS standards. Increasingly, institutional investors are more open to making investments in the emerging markets, not only because they are more opportunities, but to further re-risk their portfolio. Cross-border M&A activities, next cross-border mergers and acquisitions (M&A) have emerged as a method for companies to enter new markets, and global trends suggest increased deal volume is on the horizon. For an international M&A deal, the investment banker tasked with building the M&A model will be required to compare the financial reporting of both U.S. and non-U.S. companies. Skip this one, did that one already. So the history of IFRS from the beginning of 1970s to now, well, this is from 2001. All right. In 1973, formation of the IASC was found. The International Accounting Standards Committee was formed to create a unified set of accounting standards. This was the first step towards global harmonization. The 1980s to the 1990s, the development of the IAS International Accounting Standards. The IASC introduced IAS International Accounting Standards over the next few decades, which were the foundation for IFRS. However, these standards were seen as non-binding and not universally adopted. In the 1990s, globalization adopted momentum. During the 1990s, countries like the European Union started to adopt the IAS, which is the International Accounting Standards, pushing for the need for a more robust global accounting system. And in 2001, the IASB was established. The International Accounting Standards Board was formed, replacing the IASC and becoming responsible for developing the International Financial Reporting Standards, which we're covering in this video. So they adopted it under the IASB. So some key milestones in the IFRS development. In 2005, the adoption of the IFRS. In 2005, the European Union made IFRS mandatory for all publicly listed companies, making a significant step towards global adoption. In 2008, border global adoption. They became border, which by 2008, countries such as Australia, Japan, Canada, and South Korea adopted the IFRS. So it was adopted globally, further expanding its global reach. In 2012, U.S. and the IFRS convergence discussion. The United States began exploring the convergence of U.S. GAAP with IFRS, though they have not fully adopted the IFRS to date. And then the ongoing revisions, the IASB continued to update the IFRS, introducing new standards such as the IFRS 9 financial instrument and the IFRS 16, which is for leases, reflecting changes in the global financial landscapes. So some of the key standards, which was discussed before, the IFRS 15, which is for revenue recognition, that was that came out 2014. The IFRS 15 standardized how and when companies recognize revenue, making the process clear across different countries. I'm sorry, across different industries. The IFRS 9 is a financial instrument. IFRS 9 provides rules for the classification, measurements, and impairment of financial instruments, including investments, loans, and other financial assets. IFRS 16, which is leases, IFRS 16 requires companies to recognize most leases on the balance sheet, a significant change from previous standard. The IFRS 17, which is insurance contracts, introduced the standardize the accounting for insurance contracts, aiming to improve transparency in the insurance industry. Here's the five-step model for the IFRS 15. One is identify the contract with customers. Two, identify the performance obligation. Three, determine the transaction price. Four, allocate the transaction price to the performance obligations. And five, recognize revenue when or as the entity satisfy a performance obligation. Current status of IFRS adoption. Global adoption. Over 140 countries have adopted or are in process of adopting IFRS, including major economies such as the European Union, Australia, Canada, China, South Korea. The U.S. and the IFRS. The U.S. remains a key exemption with U.S. GAAP still in place for most companies, though there is ongoing work to harmonize it with IFRS. The IFRS and multinational corporations that operate across borders benefit from IFRS as simplifies their reporting standard requirements and reduce costs. Here's a map of the IFRS globally, and some of the countries that adopted it. Canada, China, right, Brazil, Europe and Australia. So that's a picture of global move towards IFRS, moving it globally. Challenges in IFRS adoption. Cultural and legal differences. Countries with establishment accounting standards such as the U.S. are hesitant to adopt IFRS due to cultural and legal differences in financial reporting. Transaction costs. The transaction to IFRS can be costly for companies requiring system updates, employee training, and significant time investment. Complexity and implication. IFRS standards can be complex and require companies to adapt to new rules, creating challenges for small and medium sized businesses. and the lack of enforcement in some regions. In some regions, there are insufficient regulatory oversight or enforcement, making it difficult to ensure compliance. The future of IFRS. It's a bright future for IFRS. Sustaining reports, talk about convergence with US GAAP, uh, digitalization and IFRS, emerging technologies such as blockchains and AI may transform how IFRS standards are applied and how financial reports are prepared and audited. Here are some questions. Who sets the standards for the IFRS? The International Accounting Standard Board, IASB, an independent international organization that's responsible for setting and maintaining IFRS. Is IFRS more suitable for certain industries? IFRS aims to be applicable across industries, but certain industries may have specific guidance within the standards. And can a company use both IFRS and GAAP? And the question is, while companies generally choose to use either IFRS or GAAP for their financial reporting, some multinational companies may need to reconcile financial statements using both sets of standards for different reporting purposes. And that is the end of my video. To wrap up, the IFRS has come a long way from its early days in the 1970s to becoming the global standards for financial reporting. It is a system that ensures transparency, consistency, and accountability in financial market worldwide. Thank you for watching my video. If you have any questions, please comment below.